If you're interested in learning how to invest like one of the most successful investors of all time, Ray Dalio, then this video is for you. Ray Dalio built Bridgewater Associates into the world's largest hedge fund, with over $150 billion in assets under management. His principles-based investment approach has allowed him to make billions while successfully navigating multiple economic cycles and market environments. In this video, we'll dive deep into Dalio's investment philosophy and strategies that have contributed to his immense success. From his risk management techniques to asset allocation models, we'll unpack the key pillars of how the Steve Jobs of investing approaches the markets. Dalio's investment principles. At the core of Dalio's approach are a set of deeply held principles that guide his decision-making. He has spent decades studying the patterns and cycles in economies, markets, and human behavior. A few of his fundamental investment principles include: 1. Embrace reality. Successful investing requires an objective, unemotional view of the world based on data and facts, not opinions or narratives. Fight against your ego and blind spots. 2. Practice radical transparency. Encourage open discussion, disagreement, and constantly stress test your investment thesis. Be wary of groupthink. 3. Systemize decision-making. Build systems, rules, and processes to remove human biases and emotions from your investment decisions as much as possible. 4. Balance risk and reward. No matter how good an investment seems, there are always risks. Seek a proper balance between risk and potential returns. Risk management obsession. One of the hallmarks of Dalio's approach is his relentless focus on risk management. He's just as focused on protecting against losses as he is on generating returns. Some of his key risk practices include using leverage judiciously and always having a pre-planned exit strategy, extensive stress testing of positions across various economic scenarios, diversifying broadly across global asset classes, having ample dry powder to take advantage of dislocations. Dalio is famous for saying, "You can't predict but you can prepare." His extensive risk controls helped Bridgewater survive and even thrive during turbulent market conditions like the 2008 financial crisis. The all-weather portfolio. One of Dalio's core investment strategies is called the all-weather portfolio. It's designed to perform well across different economic environments by allocating into 4 major asset classes: 30% stocks, 40% long-term treasury bonds, 15% intermediate-term treasury bonds, 7.5% gold, 7.5% commodities. The goal is to create a balanced, all-weather portfolio that zigs when the economy and markets zag. For example, during economic contractions, bonds and gold tend to rise as stocks fall. This built-in diversification helps smooth returns. Leverage and alpha sources. While the all-weather portfolio forms the risk-balanced foundation, Dalio also uses leverage and alpha-seeking strategies to attempt to boost returns. At Bridgewater, quants and data scientists scour thousands of factors across economies and markets seeking out pricing irregularities to exploit. Some of the key alpha sources have included global macro trading based on economic fundamentals, trend following across asset classes, arbitraging pricing discrepancies between related securities, opportunistic trades based on analyst research and catalysts. Dalio freely admits that generating consistent alpha is extremely difficult. But by combining lower-risk foundational strategies with higher potential alpha opportunities, Bridgewater has been able to generate exceptional returns over decades. The Holy Grail: surviving and compounding. Ultimately, Dalio's holy grail of investing is surviving across multiple market cycles while compounding capital relentlessly. Rather than swinging for home runs, he grinds out consistent base hits year after year while protecting against major drawdowns. As he often says, the biggest money-making secret in the world is just the process of keeping on getting wealthier by remaining a humble student. Or as Dalio put it more bluntly, survive first, then thrive. This patient, risk-aware approach combined with intelligently applied leverage and investment skill is how Ray Dalio has amassed a net worth over $20 billion over his 50-plus year investing career. Closing thoughts. While implementing all of Dalio's strategies may be impractical for most individual investors, we can certainly learn from his intellectual discipline, radical open-mindedness, and holistic approach to managing risk and portfolio construction. By remaining humble, constantly learning and adapting, obsessively managing risk, and harnessing the power of diversification and compounding, individual investors can put themselves on the path to long-term investing success even if they never reach the lofty investing heights of the legendary Ray Dalio. If this video resonated with you, be sure to like it and subscribe to this channel for more investing wisdom and breakdowns of how the world's most elite investors operate. Thanks for watching.